Welcome traders to this week's analysis of gold. My name is Vic. Thanks for joining me here. Let's see what has been happening on gold. So very quickly, if you remember and if you have been following my analysis for some time, you know that we have been looking at this particular W pattern here. The market created this W pattern and we have been looking for short positions since then. Then around 1680, we started to go for long. Then we moved our bias to short position once again. And right now, what's happening, if you pay attention to this current structure here, what's happening there is that if I show you, if I just come here, the market is trying to create an M pattern here. And for that to happen, it needs to go through the midpoint. So last week, what happened? The market came very close to breaking this midpoint. It touched it, but it started to go up. Now that upward movement is kind of expected. Why? Because last time it actually moved up. So for 2 months straight up, it decided to go up. That means there will be few orders here left. That means the market is going to go up, and that's what we did last week. In fact, the whole week it actually kept on dragging its feet, but towards the end it started to move really high up because it wants to respect that particular level, which used to act as a very good demand zone. Now if I go to the weekly time frame, now if you look at my previous week's analysis, there are two scenarios that I've been mentioning, right? This is one, that market is creating this, is about to create this M pattern. I shared this and reminded you of this in Telegram group as well. So this is a bigger M pattern that we have got, which can form. There was a smaller M pattern which completed, and then market was expected to go higher, which it did. And on lower time frame, there was another small pattern which I posted about. So if I go to a daily time frame, on smaller time frame, there was another M pattern, which you should have been aware of. This one, the market did not actually stop there; it fell right through it, and this is actually one of those things which caught most of the traders. Now we have been looking for bearish trades only. The reason behind that, I'll come to that in a second when we look at the water and research, but we have been looking for bearish trades. So in fact, instead of looking for long trade, we were actually looking for a short trade. So in our FCP students room, we had been looking at all these possible scenarios, and we were watching this M pattern, and some of us are able to take a short position here, and once it actually closed below here, we started to look for long position. Now we did not go for a long position almost immediately. We waited for the confirmation. Why? Because you never trade without a confirmation. And another reason is that market actually fell down pretty hard, and we never knew that it was actually going to go through this without actually showing us any kind of support here. So it was quite possible that market could actually fall back down even little further before going up. So that is why we waited for a long position. And what I did on last week, I posted this idea here, which is here. So when we waited for the long position, we actually waited for a proper confirmation, and this pattern was forming. And this is the one which actually gave us very good profits. Now, if you actually took a long from here, in our opinion, that was a little risky because the market actually shot down pretty hard. So it could have actually gone in the same direction. But if you took that, that's fine. You made some money, that's very good, but you have to follow the plan. So our plan said that we were looking for a long position from here. There was a previous gap around here. There are a few more gaps which are left, so ultimately the market is going to go to them ultimately to close them. But this is what happened. So we were looking for a long position, and it hit all of our targets, and it was very good trade. It was nearly no risk trade because we knew that market was going to go up into that. So what we have right now is, if I go back and open the original analysis that we had, so this is what we have got. So I'm going to show you all the levels which are there. So these levels are still intact, and there is no problem. Like now this one, the market fell down, but it almost touched that 1676 level almost. But what happened actually, this move touched all of these you can say profit targets or even supports or whatever. Right? But why right now what it is trying to do is go back into this FCP zone, and this is also close to 1800, and it is also close to a very good fib level. And in this case, if it actually reaches there, we can actually have a very good W pattern as well. So the market can actually form something like this reaching there. So that's a possibility. So watch out how the market actually opens up, because the market was very bullish on Friday. So there is a possibility that the market can actually start by going down a little bit first. So that is a possibility, but for now it may actually go back up. So watch this and watch DXY with this, because right now DXY and this are kind of like working in correlation. They may or may not work all the time in correlation, but right now they look like they're working in correlation. So watch DXY. I've already posted analysis of DXY on there. um, let's go and look at what I envisage. So if I go to the monthly time frame, we are still looking for this profit target or this target on water curve. um, right now this is bearish. Unless we see a color change here, we will still look for bearish move on monthly time frame. We never reach this profit target, but ultimately sooner or later we are expected to reach there, and that is the reason why we did not actually go for an immediate long position. We could actually see further downward movement to touch this and then go back up. That's why we were trying to play it safe. After the market fell down, we looked for specific specific signals to go for a long trade after this huge fall that happened. Okay, let's go and look at the daily time frame. On daily time frame, the market started to turn bullish here, and that's when we took the trade. When the market closed, this candle closed here, and this was turning blue. We looked for a trade into into the buy position, and this can actually keep on going up to this level water curve. There is a gap available here. There are few gaps available above that as well. There is one gap around 1865, and there is available around 1880 as well. But for that to happen, it has to go through this previous structure level here as well. And there is another thing that you should be aware of, is that we are right now focusing on short positions more rather than long position. The reason behind that is that this water curve has actually changed its color to red, and when that happens, the market is going to give us more bearish opportunities, and that's why there was so much bearishness here, so much bearishness here. And so if even if the market goes up above into 1880 level or so, that will be a very good area to look for a short position. So I will personally look for long positions as well, but my bias will more be towards short positions, because I'll be targeting extended profit targets on short positions unless I see a change in structure. So that's what we have on daily and weekly and monthly time frame. Let's go and look at it on 4 hour time frame. On 4 hour time frame, this is bullish. Right now the color is all blue. This is all blue. The market is going up. There was a little bit of break here, but it is still looking like it is going to go upwards. This price action needs to be cleared. This is not looking a healthy price action, so I'm expecting market to continue to rise into this. So 1800 is fine, but it can go all the way into 1814 or something like that as well, because ultimately this price action is not healthy looking price action. It needs to be cleared. In fact, actually this price action is also not healthy looking, so ultimately market is going to fall back down. So how do we trade this? So the first thing that you must do is actually watch how it actually opens. Right now, because the market was very bullish on Friday, it was kind of extended. It can actually fall down to start with, and if you want to take that short position for some time, it's fine, because it can come down to test this water curve here. It can fall back down to this, and then you can look for a long position into this area also. And if you find a confirmation there, then look for a short position. Or if the market continues higher to clear this price action, then after that you can look for short position. Let's go back to the charts to see how that will actually look on the chart. Remember, 1806 level is very important level, and that's where the bad price action is. So the market can actually come back again to 1806, but for that to happen, it needs to go through all of these levels, including this FCP zone as well. So at each of these levels, make sure that you are managing your positions or taking partial profits, or do whatever you want to do, but make sure that you are treating them as profit targets or resistance. But this is this is the area where I'll be targeting in terms of bullish movement, and after that I'll be looking for bearish move into gold. So this is my analysis on gold. Hope you enjoyed this. If you found this useful, make sure you hit the like button and share it with other traders and trading communities. Have a great trading week next week, and I'll see you in the next one. Thank you.